I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome to the show, Tim.
Jim, thanks again for having me.
You were saying just before we went on air that the markets have been so frustrating. But then some of the experts you've talked to say there's been so much manipulation of the so-called fixes, the gold fix, the silver fix, that it is fixed. It is manipulated.
Well, as a technician, I struggle with that because, on the one hand, you want to believe that the market is bigger than what some entity could do to totally manipulate and fix the market. Now, I think you would be naive at the same time to think that there's not an element of manipulation going on. I mean, obviously, the extension of the 4-year cycle advance into 2007 was a result of intervention by the central bankers. I mean, I don't know how much more obvious something gets than that. I mean, they openly, cut interest rates and tried to save the market, and in the process created the worst financial crisis since the Great Depression. And since then, they've done more of the same. And yes, we've seen things that we've never seen before. We've seen cycles extend. I mean, we're dealing with the longest extension of a 4-year cycle since the inception of the industrials in 1896 now. We finally saw the DNA markers fall in place, and now that's being stress tested as well. So, yeah, I don't know the degree of the manipulation that particularly that is taking place, but I can admit that I'm seeing things that we've never seen before, and that doesn't make sense. That said, I don't think you can manipulate a market, any market, forever. I think that it only makes matters worse, and ultimately the market is going to have its way, and ultimately, we're going to see the setup. I mean, with as I say, with the DNA markers, regardless of which market it is, be it gold, the dollar, I mean, bonds, whatever. I mean, it's going to set up with that technical setup to turn it, be it a top or a bottom, and the market will have its way. Can they extend and distort the cycles? Absolutely. We're living proof of that. We've seen that. History tells us that they can't manipulate anything long term because no one can show me a long-term example where they've ever been successful. It doesn't work. It can't. And it only, in the end, makes matters worse. And if anything, I think what we have seen is that as a result of this manipulation, it's like kind of, they box themselves in a corner, so to speak, in that they start trying to help the market and rekindle the animal spirits and cut interest rates and do this and just kind of, get things going again. And then when that fails, well, you have to do a little more and a little more and a little more and a little more. And then I think they've kind of boxed themselves in a corner where now they're, fully involved. But, Jim, I don't see it. I just don't see it long term, lasting. I mean, you just can't continue to do what they're doing.
Well, apparently the Chinese economy has stabilized. It's not plunging anymore, but the cost to the Chinese government was something like $1 trillion worth of boosting just to get them back to even.
$1 trillion worth of food stamps?
Well, no, of boosting the economy, of manipulating, of buying stocks and so on.
Oh, I misheard you.
Yeah. So $1 trillion to put things, quote, back to normal. And that was just for 3 months.
Well, if it takes $1 trillion to put things back to normal, then things aren't normal.
What should they have done instead of spending the $1 trillion?
I think let the marketplace be the marketplace. You know, there are cycles that have to ebb and flow. I mean, that's. I mean, everybody knows about business cycles. I mean, things have to ebb and flow. They have to be flush, and until that happens, they're going to continue to fight. The central bankers are going to have to continue to fight and fight and fight, and all they do is make the bubble bigger and bigger and bigger, and ultimately, in the end, it's a worse and worse problem. I mean, an example of that was as recent as the things that they did into the 2007 top, and look what followed. This time will be no different. Now, have we seen the top? Do they blow the DNA markers out? Do they extend it another month, 6 months, 3 years? Don't know. But it is what it is. I mean, it is an extended cycle that will come unraveled. And when it does, it's going to be ugly. History tells us that.
Why do governments continue to rely on central banks to somehow save their butts?
You know, I don't know the answer to that. I don't know what someone else is thinking, really. I don't know. You can say, well, it's all about the too big to fail banks. You can say it's all about self-interest. You can say it's all about Wall Street. You can say it's all about what I don't know. You can say maybe it's just a bunch of guys trying to do the right thing and keep the economy going, and they really are under the they really have the notion that they can do that, and that they can defeat the business cycle, and that they can rekindle things. I mean, maybe there's no sinister intent to it at all. I don't know what someone else is thinking, but all I know is it is what it is. It is there's that's. Now let me back up a couple steps. Since 1896, there has been a 4-year cycle in the equity markets, and it's not a bad thing. I mean, it ebbs and flows. It's up and down. I mean, everything ebbs and flows. It's up and down. And I mean, it's healthy. It's part of a healthy market. It has to breathe. I mean, it's just normal. And yet, this cycle, they have refused, and like I said, they have been able to, every time it is cracked, it appears that there's some level of manipulation to prevent the thing rolling over into the 4-year cycle low. I admit that. But we also saw that again with the advance into the 2007 top, and we all know how that ended. Again, this is going to be no different. It will crack.
Should the big banks been allowed to fail? Should the big auto companies that needed government help been allowed to go under?
You know, I don't know if I have the answer to that. I see both sides of that coin. You know, if you have a small business, a restaurant or whatever it may be, and you make bad business decisions because you make bad business decisions, then, you get washed out, and there's no one there to bail you out. Not that you deserve anything. I mean, you made a bad decision, so you go out of business. It's kind of nature, And, on the one hand, you ask yourself the same question on GM or whatever the company may be. They make bad business decisions for whatever reasons, and they have their, pensions that they can't fund any longer or whatever the case may be. And so they make these bad decisions. Should they be allowed to fail? Well, yeah. On the one hand, I think the answer is yes. But then on the other hand, I do get it that there is a too big to fail. I mean, look at the jobs. Look at what they actually do bring to the table. So that cuts, in my mind, I don't have the answer. I'm not saying I have the answer. I don't know. I would hate to be in the position to make that decision. If I were forced to make the decision, I'd probably just say, you're done. I would probably not go along with the too big to fail and let the free market be the free market. But I do get it.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to West Vancouver Friday, May 6th at the K-Meek Center. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what kind of a cycle are we in right now with gold and silver?
Gold and silver, the 9-year cycle low is due later this year. We've had a really, really nice advance out of the intermediate term cycle lows. We had it looked like we had an intermediate degree top a month or so ago. I'm not looking at the chart. And then we rolled over with some short-term weakness, and now, more recently, we've seen another rally. And I think that's still, that advance is still associated with, the advance out of the higher degree, if you will, annual seasonal cycle low that occurred back in December. In the big picture, based on the fact that there's been 9 of these annual cycles within the 9-year cycle of gold since gold has been freely traded, there should be this should ultimately be a counter-trend rally. There should ultimately be another decline, or at least a retest of the December low for the final low in gold. But we have had an intermediate degree advance. At this point, I cannot say that the advance has run its course or that it hasn't. We're between, in Dow theory terms, we're between 2 secondary high points, or a high point and a low point. And any further advance above the March high will keep that annual cycle alive and going. Any decline below the March low tells me that it's peaked, and then we may at that point revisit that 2016 December low, and for the final push down into, the 9-year cycle low.
Tim, where are we in the oil cycle?
Oil is pretty much the same thing. We have, we had price targets of, I said that oil would get into the 20s. And, back in 2014 when that sounded crazy, and that it has. We made it. So the price objective was achieved on oil for me. The question is, have we seen the long-term bottom? And at this point, I don't think so. What we've seen was, again, kind of like, and in very similar cyclical pattern with that of gold. Gold bottomed in December. Crude oil bottomed in February. There is a seasonal tendency with crude oil to bottom around this time, that time of year, it's not like clockwork. Like I said, it's a tendency to bottom around the first of the year, like that, and then rally into April, May, June, maybe July or August, but into the driving season, the summer driving season, and then a peak and then decline. But the price objective of into the 20s was met. So it is possible that we've seen the longer term low, but what I need to see, the test will be when we get to this annual seasonal cycle top a little bit later this year. Once we get that top in place, we will go down. Oil will go down, and it will at least retest the February low. The test with the higher degree bottom is simply going to be whether or not that February low can hold. I think there's a reasonable chance at this point that low can be violated. But if it should hold, then that's going to tell us we have a longer term bottom. Now, that's kind of a broad statement, but within that statement, I can say this. As this advance out of the February low progresses, the structure of it is going to give us some hints as to whether or not we should expect the retest to hold. So as this progresses, I just need to see the structure. But right now, we have intermediate degree low that is still very much in place, and the intermediate degree advance is still very much in place. And, will remain so until we get a short and intermediate term sell signal.
Did the driving season start early this year because there was good weather, at least on the West Coast?
Well, I don't know about the driving season starting early. I know that where I live on the Gulf Coast, spring break was certainly an event, and it seems like with there's no shortage of tourists where I'm at, so the driving season has been very much alive and well. I don't know that I can say that. The low in oil prices was pretty much, within the realm of expectations, so I don't see a connection there. Looking at the charts, no, I can't say that, but, I know living in a touristy area that there's no shortage of tourists this spring.
Also, there continually is talk that they're going to freeze production levels, yet as soon as they hold the talks, they say, no, we're not going to do it. Why the race to produce as much oil as possible?
I have no idea. I can't speak to that. I guess there's two ways to make money. You can sell a little bit with a higher margin, or you can sell a whole lot with a lower margin and still make the same money. So, I don't know. I have no idea. You would think that if there was a way to hold production a little bit and put prop prices up, that would be of the best interest of the oil companies. But, I don't know why they make the decisions they make.
And of course, a lot of oil is controlled by politicians. Perhaps they're driven by different motives than a businessman might be.
And that's a true story as well.
Tim, any other cycles that we should be looking at right now?
No, I just want to add that I get it for the audience. I realize that people have been listening to this, me talking about this extended 4-year cycle. I realize people, it may even be to some comical or discrediting at this point, but, it's, that's part of the psychology of the cycle and the way things have to work in and of itself too. This is without question. I developed the DNA markers not only in, equities, but, crude oil, for example, the markers and the statistics told us we'd go into the 20s. Okay, we got there. Now we got this bottom. We need to see the next step. But you have these markers. The point is to guide you along the way. You don't know you're on the right road unless you see a sign. So you have to have things to guide you, to tell you. And so that's why I developed these markers for many markets. But specifically with the stock market, it is what it is. And I can't control the fact that the market is being stretched, manipulated, whatever, for whatever reason, that it's an extended cycle. But at the same time, I see what I see. The markers are in place. It is an extended cycle. There has not been a 4-year cycle low since the 09 low. Absolutely, positively has not been. The markers tell us that. And those markers have been good since 1896. So I don't think they've all of a sudden blown up and they're no longer valid. They were fine in 2007. They were fine in 2009. And we saw no indication of a top until we got to May of 2015. So I have to conclude, that's a hell of a track record, and it's a pretty bold statement to say that they're no longer valid. And so in my mind, there is no question that we have seen an enormous extension of the cycle. And I think that the psychological impact of that is that it's gotten people arrogantly bullish. They think that the market just can never go down. and that anybody that says otherwise, and anybody with any sense that understands the bubble, that sees what's going on, are being ridiculed and poked fun at and that sort of thing, and they don't know what they're talking about. I think that's all part of the psychology that has to happen, and in doing so, I think that is what makes, and as I've said all along, because of the extension of this cycle, it has created an environment that this is the most dangerous stock market stock market environment in the history of the market. And I think for all of those reasons, it is, and so that's where we are. And I don't know how it's going to come unraveled exactly. I don't know if they're going to be able to continue to hold this another day, another month, or whatever. But as of right now, the setup is still in place. And, I have some specific things that I'm covering in my letter for the subscribers that we have to watch for, that will either tell me if it's blown up or if it's on track. And if we see those dominoes fall that to further confirm that it's on track, it could come apart quick. Or, maybe if we don't see those things, then it's going to continue to tread water, and it'll be what it'll be, and until the next domino falls, and the setup goes to the next step.
Tim, thanks a lot for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.